Welcome back to another weekly episode. So nothing mentioned on this channel should be taken as investment or trading advice. Please consult your SEBI registered financial advisor. Second, the community I run on this channel has nothing to do with FNO, short-term participation, BTST, target and stop loss. I have to specify this because I do get queries once some of you decide to come here. So there are a couple of things that we need to take note of what happened in the entire week. And these are important points that every investor should take note of. The first is what happened in the FOMC, that is Federal Reserve meet. FOMC statement was given out. Chair Kevin Walsh was more hawkish than what the market was expecting. The voting pattern was that 3 were in favor of hike and 9 were in favor of holding rates. I'll just explain this bit because for emerging markets in particular, and this is also what is causing problem in the AI and semiconductor theme, which is impacting the overall global volatility. So what he mentioned is that inflation, if you see, is moving up in the US. It is also one of the reasons why US is not escalating the war currently with Iran. And the growth is slowing down. So what is currently happening is that there is soft growth overall in the US, but inflation is turning out to be sticky. So he reiterated that 2% is what I'm going to target in terms of inflation, whereas the headline PC number came at 3.7%. So this is something that is going to impact liquidity in coming months if this number does not change. I think overall what he did was relatively sensible because he did not want to take any knee-jerk reaction given the policies that are coming out of Washington. As an emerging market investor, or if some of you invest in the US or AI themes, you need to understand this global macro development that is currently going on, because this is directly impacting what is happening in the world market. So what happened was once the FOMC meeting was held, the stock market moved lower, sharply lower. If you've been tracking the AI and semiconductor theme, there is constant bit of selling that is currently going on there. And after that, the market again started recovering, because this is a point that I've also made in my past videos, that AI theme will have massive corrections, but this theme is not going to go away so soon. And hence, you will not see a lot of FII inflow also. That is in our Indian market. So what caught attention for global investors was what was happening in the KOSPI index, that is the Korean stock market. I'd also tweeted about this, I think in the month of May, June, that it is only a matter of time before a massive shakeout correction is going to happen in this market, because every time that is the pattern that has played out historically. So from peak, Korean markets were down 44%. Relatively, India did okay. India did good because 2%, as it is before Korean markets also, India is not doing anything great. That is the large cap basket in particular. VIX for India is still stable. But this phase of brutal correction that is going on in Korean market, one day it is up 17%, next day it is down 15%. There are a lot of regulations that are coming out, short selling is being banned. So this again reminds you of the risk that is always there in stock markets. You can never discount it out that stock markets will always remain stable. There are phases. 2 years back, Korea was the worst performing emerging market. And today, that is 30 days back, it was the best performing emerging market. So these are cycles. Today, India is the worst performing emerging market, major emerging market. I think we're just below Indonesia also, if my data is right. And it is entirely possible in the next 18-24 months, India becomes one of the best performing emerging markets. This is something I'd also explained when I was doing the emerging market cycle video with you. So again, as of Friday, that is as our Indian markets are currently open, Korea market is again rebounded. It is 18% up. Samsung is up 28%. SK Hynix is up another 30%. After these stocks have corrected like 50 odd percent. So massive volatility is going on in Asian market. And you have to understand that while our Indian markets are not doing well, and I completely understand the frustration that is there, because I share that sentiment. Every day you open up the screen and hardly anything is moving. And by the way, I'll show you some data ahead that results are turning out to be really good in India, but still you're not seeing any major movement happening in the Indian markets, and it won't happen so soon. We are just taking baby steps when it comes to our movement in terms of stocks that are doing well and going into extended period of consolidation. Currently, our SMID space is actually doing that. So crude continues to remain a massive headache for our country. Now, at the start of the week, it was 90 plus, then it went up to something like 100 plus, and then it came down. As of speaking, it is somewhere around $88, and this is something that should not alarm you that much, because I don't think crude is going to have a sustained kind of a trend. You will have spikes in between because of what is happening in the world, but I think next week when the honorable RBI governor comes out with this policy, he's going to keep the rates unchanged. There is no reason per se to tinker still with our policy for the time being, because crude is relatively volatile and crude is not showing a sustained trend on the upside. So I may be wrong, but I think next week the rates will be held, and the commentary would be a little bit cautious but positive, because underlying, as you're seeing the results coming out from the small mid micro cap space, at least the listed part of the economy seems to be doing well. So when it comes to the Indian market outlook, about 58% stocks within Nifty 500 basket have now moved above 50 DMA. It was 51% a week back. Out of that, 13 out of 14 are improving. That is the number of stocks that were not doing well. Out of that, 13 stocks have actually improved their performance with respect to 50 DMA. So when you take the entire universe, 3,356 stocks, 48% are above 50 DMA, 46% are above 200 DMA. And stage 2 structure, which is nothing but a clean trending higher high, higher low structure with rising relative strength, about 37% stocks are there. Our universe is the mid small cap micro cap space. In this, the numbers are good. Above Stan Weinstein's 30 weekly moving average, you're seeing more than 60-64% stocks that are above it. Why your PF is not working in the last 2 months is because we are pulling back whatever gains we had between the month of late March and April end. That is why May, June, you've seen it is relatively flat. If you had a PF, it has not gone anywhere. It would be flat. And it is now pulling back. It is pulling back because we are digesting the gains that we saw in the month of April and mid-May. And the same applies to small cap and micro cap. Why the SMID investors would have not felt great this particular week? Because suddenly Nifty 50 and Nifty 100, we have seen improvement happening in this pocket. So 60% stocks have gone above 50 DMA, and here 64% stocks have gone above 50 DMA. So what has essentially happened is some of the massive underperforming sectors, case in point, digital, IT, have suddenly seen movement on the upside, and that is why these data points have improved, and there is a feeling that not much has happened in the market, and probably it is the time that large caps should be looked at, and large caps are supposed to do well. I'll answer this question when I open up the results slide. So when it comes to change from last week, about 5% extra stocks in Nifty Total Market Index went above 50 DMA, 4% above 200 DMA, and about 5% above 30 weekly moving average. So we saw a positive change overall in the Nifty Total Market. Now just look at this slide. Look at the change that has happened in Nifty 50 and Nifty 100, more so in 50 DMA. This means a short-term pullback into a long-term downtrend has also happened in IT and digital. So you have to understand what was strong, that is small cap 50, small cap 100, mid cap select. These were already strong, and these numbers have actually strengthened in this week also. So if you look at mid cap select, again, for those of you who are active in the futures segment, Nifty 50 and Bank Nifty, yes, have moved, but a steady trend has been displayed by mid cap select, because this is one of the main indices which has some volume in futures segment, which has actually not been that volatile. So you have to take the data into overall context when it comes to 200 DMA also, because not many stocks in Nifty 100, Nifty 50 were already above 200 DMA. It is just that IT has improved, or IT has had a short covering rally because one-sided sentiment was going on. A lot of bearish commentary. Is it still the time to look at IT seriously? See, it is anybody's call, but what is weak generally gets weaker over time. So IT, because there was one-sided sentiment, you'll always find that whenever such things happen in the market, a counter trend rally develops. And that is what IT movement is for me today. It is a counter trend movement. Now, let us talk about sectors. So hospital is something I've mentioned many times, but healthcare is the dominant theme. That is something that we discussed in the last couple of videos also, last video also. And it is clearly reflected. If you look at number of stocks in stage 2 structure above 200 DMA, above 30 weekly moving average, it is this space. That is the pharma, healthcare, mid-small healthcare, hospitals. Yes, NBFCs and small microfinance institutes are also doing well, but that is in the finance segment. But broadly, this is what is currently doing well. Then the India defense space, mid-small India consumption, capital market, private bank, capital goods, these are also the pockets that are strong and are doing well. Why I've included this? Because there is an ETF available for all of these sectors, and it is relatively easy to map out. Defense and capital market, again, I'll repeat, it is our own very own AI kind of theme, and these themes over a period of time will keep doing well, because defense is a global theme, and this is going to gain traction over time. Capital market is our ingrown India specific theme, and as AI starts to eat a lot of jobs, I have a theory that a lot of people will start coming to capital markets because of the false advertisements and these unchecked influencers who keep saying that trading is a second income that you need to build, or if you want to buy something, you should trade and generate income out of that. All those ads that you used to see before the market regulator took note of it and really got serious about it. But even now, if you see, this theory is still being promoted so much on Telegram, on Twitter, that so it's a herd psychology that comes into the picture, and you will find a lot of people who will start losing their jobs. They will eventually bring their hard-earned money to capital markets. So these companies indirectly will benefit. Plus the base, because we have a young working force, and a lot of people, millions of people are going to be added to the working force. It is not that AI is going to take away all the jobs. So the base is also going to widen, and that is why these companies obviously over time will do well. Then there are some sectors that are sitting right at the border, something like chemicals, core housing, manufacturing. They are neither that strong nor that weak. Chemicals sector in specific, it's coming out with good numbers, but I think still on charts, the structure overall needs to improve. What is not doing well is very clear. It is PSU Bank, Railway PSU, SME, FMCG, cement, power, insurance. This is not doing well. Of course, within this, PSU Bank and power still have very strong long-term charts, which means that whatever the market is going through today in these specific sector pockets, it is nothing but a decent kind of a consolidation, a decent kind of a pullback that is happening after the kind of move that these sectors exhibited in the early part of this particular quarter. So now let me take you to results so far. So far, again, this data I have pulled through screener.in. So the data is valid. So far, out of the data that I could pull out is about 600 odd companies. I actually avoided companies that are SMEs and that have really poor market cap, low volume. Those kind of numbers I've not included. But if you look at it, the median revenue growth year on year has been 17.8%. Quarter on quarter, it is about 3.2%. And 89% companies have actually improved their revenue year on year. 62% have expanded operating margin year on year. So I would tell you that results have actually been very good up till now. There are still, almost another 700, 600 stocks, liquid stocks to come out with numbers. And I don't think that's going to change whatever is happening here, because you have a good kind of mix of large caps, small caps, micro cap companies also. So about 70 companies which have market cap of more than 1 lakh crore. The revenue growth year on year has been 16%. Revenue growth quarter on quarter has been about 4%. Net profit about 18%. But if you look at the small cap and mid cap and micro cap space, the net profit growth in micro cap is 35.7%, 26.3% for small cap, 25.8% for mid cap. So you have to understand that ultimately price is a function of earnings and PE multiple. If earnings keep coming in the micro cap, small cap, mid cap space, you will have to rely on trend. There are three things that you have to understand. One, the trend of price. Second, the trend of relative strength, that is micro cap stocks against Nifty 500. And third, the trend of earnings, or rather, is the margin and profit expanding for companies? That is the thing that you have to always see. And the sample size is not small. 245 micro cap companies, 166 small cap companies, 98 mid cap companies. So you're seeing that is why the performance of stocks in this segment has outpaced large cap, and it will continue to do so. So the listed part of the economy, again, I'll repeat, whatever is listed in stock market, whatever results they are posting, that itself is telling you that underneath the economy is fine. Now, the people part of the economy is a completely different debate, and I don't want to get into it because that is not relevant to this channel. But the listed part of the economy that is there in stock market, that is posting the numbers are really good, and it is not justifying what is currently going on in the market. Many a times, even today, you'll be finding that your company is coming out with fantastic numbers. It opens with a gap, but again closes in the negative. And God forbid if your company misses the guidance, it is down 15, 16%. It is just sign of times. Like in life, you go through various cycles, sometimes up phases, sometimes down phases. The same thing happens with stock market. It is just that we enjoy the up phases so much that we don't want to see a down phase. And it is very similar to what every investor or a long-term trader goes through. So there are a couple of points that you have to keep in mind. The first is patience. You have to be patient because this is such a difficult phase in the market. It is slow and sluggish. Every morning, if you have a portfolio, it moves up. By the time the day ends, you will see the portfolio would have given back substantial gain for the day. And then again, you will see a small gap up happening the next day. So this is a slow and sluggish phase. You've got to be patient. The second, leadership. Leaders in strong relative strength stocks are currently not rising much, but they are not falling either. Always take this into cognizance when you are deciding to churn your portfolio or get into some hot theme that is there today. If your stocks are not falling or consolidating in a range, you have to hold them. Second, you have to understand that the market moves in cycle. Market alternates between trend and consolidation. But if you need to participate ever in the trending phase, you will have to sit through this painful phase of consolidation. Then comes earnings. Results so far are very good in our market, and market will price in eventually. But for you to realize that, or for your portfolio to realize that over a period of time, you will need to be positive. You will need to be someone who's eternally optimistic in market. Otherwise, you won't survive. Just because these days we have mobile devices, we all keep reading what happens on social media. People posting crores and crores of their portfolio. And whereas you start thinking, where are you in life with respect to that? Don't ever do that to yourself. Your portfolio will take time to grow. You got to be patient. You have to be optimistic whenever you're reading some brokerage reports, especially from foreign media houses about India as an economy, India as a country, or whatever is going on. You have to be positive, because this is again with respect to stock market. Whatever I speak is with respect to stock market only. I have no interest in communicating something else. So always keep this in mind. The last point is about breadth. You are seeing slow and steady breadth improvement is happening in the market. Again, I will tell you, don't expect a massive positive move, especially in indices like Nifty, Nifty Bank, because there are no catalyst. In the very short term in Nifty Bank, you can have a catalyst, especially there is some announcement about a particular bank's chairman, CEO, those kind of things can happen. That can be a massive trigger, but you got to wait till that particular moment arrives. So let the market show you definitive direction. Don't be scared. You always have your stop losses to take care of your account. Don't do this BTST short term, this kind of thing. It is going to take a toll on your account. Keep your transaction cost in check. Do not rotate. Do not go in and out. You are paying massive amount of money for that. So don't do that mistake either. All right. So I'll see you next week. Take care and be safe, guys.